start to 2025. It turned out to be a quiet start and then it picked up nicely. All sectors chugged along. Barring, of course, a few odd metal names, perhaps, which did ebb off. But yesterday, the charge was led by autos. What with the move coming in on an M&M, on a Maruti, some of the heavies from within the banking pack, L&T, etc., they all participated quite nicely in trade. The broader markets also held out quite smartly. Of course, you can debate that move came in on the back of low volumes, but today it seems like it's back to business.
Yeah, it's back to business. And what you would ask yourself every time at the beginning of the year is that how will this year be different from last year? What will continue? What will change? And what will not continue? And that's a question which I guess we've been asking everybody over the course of last 10 days. And I think we'll continue to maintain that line of questioning on the channel for our viewers as to how will 2025 be different than 2024. And my sense is that it will be a lot different. It will be a lot different. There are two ways of looking at the market. First, look at Nifty, 8% return, which is frankly nothing extraordinary, which is below par return, which means the case for large cap stocks to give a double-digit return if all goes well this year is strikingly high. Similarly, if you look at the micro caps, some of the outperformers in the SME space, the returns have been north of 50 to about 100%. The BSE SME IPO index has given a return of more than 130%. So that kind of a mad euphoria is not going to continue. So this year really could be a very different year in terms of the pecking order. The store of value is large cap. The store of value is not small cap. Small cap and micro cap is where you may see reversal. Large cap and underperforming banks and FMCGs where you may see a comeback. The first 3 months, I guess, would be all about the Trump regime. It will be all about adjustment. And for me, the first 3 months, the real trade to watch is that at what level the dollar will peak out and how exactly financial markets will take to the new change of regime and how much of that is priced in. So that becomes a narrative for next 45 days, next 3 months. The local narrative would be centered around earnings first, and then it would be centered around elections. How much of the economy is how much of the economic slowdown is in the price? That's the other question which we would debate and deliberate. But in general, I don't think this is a year where you actually will say outsize gains in the Chintu stocks, if I may use the word, the Chotu stocks or the small and the micro cap stocks.
Okay, not the year for Chintu stocks, perhaps for the large caps. That's the take coming in for now. But yes, first 3 months are going to be important, not just the Trump administration. The budget is, of course, the big domestic cue that one needs to watch out for. And Q3 earnings, whether there's any sign of recovery or not, is something that everyone would be eyeing for. You're watching out for global cues, but you know you won't have any because everyone else was not working yesterday while the Indian markets were on. So there are no major global cues really to talk about. This morning, Asian markets have opened a bit tempered at this point of time, so just watching out the cues coming in from there. Apart from that, not much to really talk about. In fact, China stocks have ended the 3-year losing streak because they managed to gain 15% last year, and for now it's a bit of a tempered start coming in for the Asian markets as well. But what's been the case about last year has been the stark outflows coming in from FIIs. Yes, one can argue that if you add the primary issuances, etc., it might be able to adjust a bit, but nonetheless, there was a 3 lakh crore outflow coming in from FIIs last year. The saving grace clearly was the DII money. 5.25 lakh rupees pumped in by the DIIs, and that compares, Nikunj, with less than 2 lakh that they pumped in 2023. So clearly, I think the big story for 2024 was the DII and the retail participation.
So, Nisha, 184 becoming 5.2 is the story. The DIIs have been buying for 3-4 years, but the quantum of increase, I think, is extraordinary. It is NFOs. It is SIPs, and it is the whole change what we've seen which also is coming by the fixed income market. Because the DI number is not only equity, it is also money which is coming from fixed income, it is also money which is coming in, balanced advantage funds. A lot of those schemes in a sense have seen a big change in terms of allocation also towards equity. So, hybrid funds and other funds, they've increased their exposure to equities. So for me, I think this is the real success story of where we stand. Will this continue? And even if it stays the way it is, which is the domestic liquidity stays strong, I don't think this year we would see an outflow of 3 lakh crore from foreign institutional investors. So if liquidity is the near term, in the short term market will depend on liquidity and momentum. So if this number of 3 lakh crore turns, the selling reduces and the DI selling does not, DI buying remains constant, which it should because of the SIF flows and other things, then we could be in for a rally for large cap stocks and for some of the FI dominated stocks. Everybody's bewildered with the fact that why do we have 3 lakh crore of FI selling, but that could really be attributed to valuations, dollar index, what is happening at global level in terms of way how the risk on movement is moving. So this is not going to last. So when and how I don't know, but it will happen somewhere in the course of the year that FIs will be coming back and dollar has to pick out.
Oh, yeah, absolutely. And a lot of data points as well that the market is going to be focusing in on. And come yesterday, we already had a couple of changes which were made, taken into place. The auto sector sales, of course, they started trickling in. Auto sector, you had some price hikes as well, which a few companies had announced earlier, which came into effect as of yesterday. BSE, of course, made those changes to their expiry dates as well. There is a TCS now on luxury goods. More than 10 lakhs. So that also came into effect. There are, multi-factor authentication, which is now mandatory for GST compliance. For UPI as well, the transaction limit has now been up to 10,000. So a lot of these changes which came into effect. Other than that, of course, the high frequency data points as well. And it's a bit of a mixed bag. While, of course, the GST collections in the month of December were a little lower than what you saw in the month of November, which was at about 1.82 lakh crore rupees. 1.77 is what it clocked in the month of December. The auto sales, of course, something more in the near term that the market is focusing on, that seemed like a bit of a mixed bag. So while it's a below scorecard for Bajaj Auto, and remember why it's critical, because Bajaj Auto has been one of the best auto stock performers for the year gone by, and what a comeback by that stock really. For Escorts Kubota as well, it was a below scorecard, but the surprise really came in from not just Eicher Volvo, but a Maruti Suzuki. Of course, it's a lower base also that they worked with, but that saw numbers which were ahead of street estimates. M&M, no surprises here. They also managed to beat the street estimates. And for Hyundai as well, it was actually an above count. So a little bit of an uptick and some sort of silver lining, if you call it, at least in the passenger vehicle segment.
December after Diwali is always a tricky one to call. I'll tell you why. Because December you have the year-end compulsions, and in year-end compulsions you really want to see. This is not the retail data. This is the factory dispatch data. Factory dispatch data, I can dispatch a bit more. Create up the inventory levels, or inventory levels have got depleted. I've given a good discount. My point is that when you are doing dispatches at a wholesale level, is that really translating into retail sales? And B, what are the levels of discounts we've had this time around in the chain? And whichever way you look at it, discounts actually have been very large in terms of the total, discounts have been very large in terms of an individual buyer. So I think within the auto space, you'll have to wait for at least one more month to conclusively come up with the data or a view that to where things are moving. B, Mahindra and Mahindra, I think, is a clear outlier. And I think that is getting more and more cemented. Not that it was ever debated, but it's getting more and more cemented in terms of what they're able to achieve and how things are progressing in the right direction for them. So if you put all those factors together, I think Auto Mahindra is an outlier. It's too early to come up with a conclusion based on November and December data as to which way things are moving. But yes, in general, you can safely assume and say that the January data would be a much better indicator of how things move forward. GST, it's not bad at all actually, while there is a slowdown, but considering that if you're comparing the GST data, and I'm looking at that like the range, it's between 1.8 to about 1.75. August and September, when the economy was not slowing down, the data was 1.7. Now the economy has slowed down decisively. So October, November, the trend line has not gone below 150. Which means that the GST collections are not that bad, and which in a sense is also an indication that the slowdown which everybody is experiencing and perceiving, the GST data is telling you that it is there, but it is not that bad. That's my limited point.
If you like this video, then like, share and subscribe to ET Now.